The next session is Time Flies in DeFi and Where Are We Heading? And to introduce this panel, we have one of our favorite moderators, Ed Robinson, formerly from Bloomberg and then institutional investor, and now defiantly carving out a new brand with Defiant Media. Please welcome Ed Robinson to the stage.
Hello, everyone. It's good to see you all. I was so delighted this morning to see DeFi as a running theme through so many of those presentations. And it was really a scintillating morning of programs. And we plan to pick right up from that with this panel. May I please introduce our panelist, Vijay Chetty, the head of business development at Uniswap, which is the leading decentralized exchange. Vijay, please. Josh Goodbody is the COO of Qredo, which is a cross-chain protocol for asset managers and traders. Ralf Wandmacher is the CEO, sorry, I didn't want to demote you there, of StablR, which is a financial infrastructure provider. And Guenther Dobrauz-Saldapenna is a partner at PwC. He's an author, and he leads the legal practice in this country for PwC. And he also has a venture arm. So he's also looking at things with another hat as an investor. So, decentralized finance, DeFi. I like the name of the panel at Time Flies because it really does. As somebody mentioned earlier today, DeFi is 24/7. And it's been an interesting period because of what's happened in the centralized section of the space in the last year. What I'd like to do for the purposes of our conversation today is divide DeFi into infrastructure and assets. That's an easier way to understand how this sector is working. And I think starting with the assets piece, so much of DeFi is pegged to credit. It's pegged to yields. It's pegged to lending, to borrowing. And we are now in a high interest rate environment, the highest rate environment that we've seen in many of our memories. And I'm just wondering, how is DeFi going to adapt, grow, perhaps struggle in a high interest rate environment? Who would like to take that one first? Josh, you want
Sure, yeah, I'm happy to start. Well, going on that theme of splitting this into infrastructure and assets, inherently assets in DeFi are extremely risky, they're very volatile, and so naturally they're categorized as risk-on assets. And so with this, this high interest rate environment that we're in, we're really seeing a pullback, a pull away from investors away from these risk-on assets. And DeFi being probably the most risky bucket of assets in this space, from an asset perspective, they are suffering the most. So that's the perhaps unfortunate consequence of the environment that we're in today. But despite that sobering reality, there is a lot of really important stuff happening on the infrastructure side. There's a massive amount of building in the DeFi and the Web3 space. And maybe just as a thought exercise for people, it's really important not to just think of DeFi as a bunch of altcoins or a bunch of crypto assets. There's this underlying infrastructure that's being built in DeFi. And that infrastructure is powering all kinds of really interesting use cases. So even though from an investment perspective, DeFi assets may not be particularly attractive at this moment for investors, just because of the pullback from risk-on assets, this is very much a time for the infrastructure to really shine. And that's really what a lot of the builders at this conference you're probably seeing. People are taking the time to invest in DeFi infrastructure because decentralized architecture really does have huge and valuable use cases that are being demonstrated day in, day out. So it's not all about the assets, but of course it's very relevant.
And speaking of the infrastructure piece, something in the earlier panel really captured my attention. I think it was Christine Moy from Apollo was talking about how an outfit like Apollo, with so much capital and with so much expertise in the credit markets, is quite keen on trying to find DeFi partners to go ahead and really to kind of help. I guess it's almost a software play in terms of just getting the workflow smoother, garnering efficiencies from that. Is that going to be a powerful theme this year, looking in terms of infrastructure build out in DeFi, that you'll see the Apollos of this world really looking for partners in that space? Ralf, perhaps you want to jump on that one?
I think you have to think about DeFi, not so much of the past, like last year. We saw like some kind of implosions, but what is really the vision of DeFi? And I heard so many people also around here saying like DeFi, we will have like 5 times the current outstanding, like if we concentrate like on consumers. Retail, I think this is wrong. You should go like for traditional finance houses. Help them. When I think about help them, and if we think about like what we heard from Apollo, think about like what is an issue and what is a high margin product of any kind of bank. It's consumer credits. It's unsecured lending. It's nothing like we're secured or so. And now like everybody in DeFi thinks about, oh, if we do something unsecured, we know where it will end. But if you think like what a bank has to pay for unsecured lending, not only in risk, but like the equity underlying, at least 8%, what the BIS says. Normally it's like 10 to 11% equity. 10%, 11% equity costs you a lot of money. Like Deutsche Bank has 50 billion unsecured lending on their balance sheet. 10% equity on that would mean 5 billion in equity. Deutsche Bank is saying like we want to earn at least 8% on that, so it means like annually 400 million. Now, if we think about DeFi, what could we do? We do a pool, and the pool is like consumer credits. So consumers can attach to the pool and say like, hey, I want to have like a credit. I need liquidity and risk providers. That could be like traditional banks. And that is really interesting from the regulatory point of view. As a liquidity provider, do I need to put up like so much equity or less or nothing at all? That's, I think, like where you suddenly see totally different numbers. You can use this kind of technology. What we have seen so far used, I would say, we are still a little bit at kindergarten level. And now we have to bring it like to the adult area. And the adult area is really like help traditional finance houses. And for that, what do you need? You need the full infrastructure. You need, for example, Qredo with MPC, wallets, and so on. You need probably us because you need a stablecoin. Yeah. And you need a euro stablecoin, not only US dollar, because we all know FX risk is something you don't want to have. But this is something what we see. And when Apollo says like, hey, we are open to help you, fantastic, let's do. And let's do it like in this year. Will it be immediately? No. We're working with regulators, we're working with big traditional houses. That's like we have to be patient. It's difficult for me to say, I'm normally not patient, but that's something like we have to work on, but the numbers are simply like flabbergasting.
I don't want to go down the regulatory rabbit hole, but so banks, they have to put up equity.
Yeah.
It's a requirement, it's basic, in order to support their lending books. DeFi does not. These DeFi protocols do not. Is that in and of itself sustainable, that model, or would at some point DeFi protocols also have to be putting up equity in some way, shape, or form?
Ask like the regulator what they think, like how it should be done. Like if we use liquidity providers, and liquidity providers could be everybody, could be not the typical like bank, could be Apollo, could be somebody else who understands the kind of risks like they're using and they're taking. Then you could ask like, okay, if they understand it's open and transparent. And that's, I think, is the promise of DeFi. Suddenly you have transparency.
Well, that's where you get the disruption thesis on banks, and it starts to, I mean, that starts to look feasible in some way, shape, or form, or at least worth a conversation.
Yeah, first you help them, then you disrupt them. Okay, sorry.
Guenther, what?
Well, I would like to offer 3 thoughts. First of all, from a venture capital perspective, right, in terms of who is really, and I'm picking up on the case that you mentioned, the name of a very big investment house. I think, yes, that may have an effect, but we've all seen the names that were in FTX, right? All the big names. And it's not about talking about what they're doing, but it means that people have to do their job. And that means they really need to understand the technology. And I would say the one thing we've learned from FTX is that they haven't done their job there, right? And people are always like buggering me, what are you doing at Excelixis, right? The thing is we are really going into
This is your venture firm, right?
That's the venture firm, yes. So we're really going into the technology, and if we don't understand it, we don't invest. Very simple. But we've never invested in anything where we haven't met the team, where we haven't seen the technology, and where we understood it in principle. So it's great that they're going in, but they have to show that they're really doing their job. So that's number one. Number two is, it's quite interesting because DeFi started as a disruptor to the industry. And now we are seeing it more as a collaboration. It's interesting because people are not taking over the companies, but they're collaborating. And I guess, again, I can't name names, but you know them, and maybe you can mention them rather than me. So that is happening now, right? So that's a new way of doing it. And it's maybe a bit disruptive, since you used that term. And thirdly, I think in terms of all the stuff that is going on with liquidity and so forth, I don't believe that is the regulator telling us, because the regulator is using laws that are in place already. And a lot of the laws we will need are only coming, right? So yes, you need to collaborate with them, you need to get them to understand, and you need to get them to put new ordinances and new laws into place that will make it workable. But ultimately, you also need to know that you will be coming up with solutions that are not regulated yet.
I see. Just staying on the asset side for a second and getting back to the high interest rate question. As traditional yield generating products, like a savings account, suddenly start to become more attractive in this environment, how do DeFi protocols respond to that, to be attractive to institutions, especially coming at a time when we have FTX overhang and these other questions? Perhaps you want to pick up on that? And you sit. What's great about Uniswap is that you're part infrastructure and part assets. You're like right in the middle here.
Yeah. I think the high interest rate environment has definitely been a big catalyst for sort of a movement from a builder perspective towards real world assets, because in sort of the DeFi summer and kind of the boom times when the DeFi industry was first coming out, it was largely centered around the token speculation around those tokens, and then the yield farm opportunities to sort of participate in the DeFi protocols and kind of earn a yield in the form of that product's token. That was largely kind of a speculation-driven boom. And I think in this current environment where you've really had a softening of the market, interest rates rising, more traditional assets look attractive from an allocation perspective, you've seen some of that outflow from a crypto perspective, right? So outflows of USDC or other stablecoins, more activity in real-world assets. And so I think there's definitely a silver lining on that from my perspective, where we'll start to see more sort of real-world asset use cases using the benefits of the infrastructure and the technology itself. And that's really kind of the long-term promise of all this, right? Was crypto as kind of the cauldron in which it started, and you first sort of started to understand these use cases, and then now we can extend this technology into real-world structured products, FX, a bunch of other asset classes that could actually benefit from a market structure perspective to use the technology. So that's something that we think a lot about at Uniswap. And just as one example, I think we'll start to see a lot more kind of fixed income products and fixed income product trading happening on chain, on decentralized exchanges, because you'll have borrowers who are facing high interest rates, and you also have a lot of crypto native capital that is looking for higher yielding opportunities. And right now, all the yield farms have kind of disappeared or are not too attractive. So that may actually be kind of a good silver lining to this kind of the market correction and that we've seen in general.
So that could be the growth story that really comes out in 2023, is this kind of infrastructure play, tokenizing real world assets. We've heard a lot about tokenized bonds just this morning in some of the sessions. Looking at some of the risks, and not necessarily the market risk, but risks inherent to the technology of DeFi. I'd just like to pick up on something that it came up in some of the panels yesterday, and I think it's worth exploring a little more, and that's smart contract risk, risk to exploits, hacking. We saw monster numbers on that last year, and especially in Hacktober, as it was called. And just share with us, Josh, if you could, a bit about how you think about smart contract risk and how pernicious that might be as these really interesting growth stories start to develop.
Yeah, it's such an interesting topic, because if you look at it at a fundamental level and you say to an investor, you're going to do something in DeFi that involves this smart contract, that investor has no way of verifying what that smart contract does or how that smart contract will perform. And that in itself is quite scary for investors. But what investors rely on up until recently are things like audit reports. So you've got this plethora of auditors out there that will audit the code of the smart contract, and they will provide some kind of rating, or they'll provide a rating and some advice as to how to secure it more. Now, despite that happening, despite professionals going and scrutinizing the smart code itself, those smart contracts get hacked. So that's a very scary position that we've seen a lot of protocols in, especially last year. And in many cases, the hack or the compromise wasn't the code itself. In some cases it was. But in many cases it was how that smart contract was created and then how that smart contract was deployed. And when you create a smart contract, it all has to start somewhere with someone. And if it starts with, for example, the developers of the smart contract, it could be 3 individuals using some kind of multi-sig device, using their hardware device, and splitting up the private key material that governs that smart contract. So you can imagine all of the attack vectors that come with that. And so that's kind of a model that has persisted for a long, long time in the DeFi space. And where Qredo has been thinking a lot about this is how can we almost eliminate this attack vector completely? And our answer is around multi-party computation. So we use a technology called MPC, multi-party computation, which uses essentially complex algorithms to create private key material and safeguard that private key material without them ever being exposed to 2 individuals creating it, 1 developer creating it. So our view is the future of the security of smart contracts will very much revolve around security like multi-party computation. And that really removes a lot of the attack vectors that were exploited successfully last year in particular. And there's a lot of other technology that's coming out that will enable developers to deploy their smart contracts in safe ways. But in our view, MPC is going to be the gold standard because you can operate it at scale. You can operate it in a trustless execution environment. So the environment that you deploy your MPC infrastructure in is in a trusted execution environment. It can't be snooped on. It can't be compromised. So we think that's the gold standard way to safeguard smart contracts. But of course, you will always need, despite securing it and deploying it in the right way, if you're a user or a consumer of a smart contract of some kind, you've got to get your hands around how it's been audited, to what extent it's been audited, and if you're comfortable actually using it. So again, it's always a do your own research question.
Yeah. Well, Guenther, wearing your VC hat, smart contract risk, how do you size that up when you're looking at potential DeFi investments?
Well, it's very interesting what you said. I have to be very careful because I'm wearing 2 hats, right?
Yeah, you're wearing
one of the biggest audit firms. I'm not an auditor. So what they are doing is they're usually coming in after you've done it and verifying it. So yes, for retail investors, and so it does make sense. But on the other hand, all the big scandals and so forth, they were all audited, right? From Wirecard to da-da-da. So I'm not 100% certain. I think the audit as such will change. People will look indeed into the technology part that is being done rather than verify about all of that. But my hope is out there that it will be important, but I think it will be something different. So what we always do, or try to do at least, is really go and see it ourselves and really try to have them explain it to us. So whatever audit comes in afterwards, we just want to sit with those inventing it and those doing it. And that is just by sitting there with them, looking them in the eye and having them explain it. And if we don't get it, then we don't invest. I mean, that's my history for 20 years, right? It's 20 times saying yes and maybe once saying no and once saying yes, right? If I don't get it, then maybe I'm too stupid, which is I'm sad, but usually I'm right. So I think if we get to sit with you and your team, that's more important than an audit report. And that is a non-PwC statement, right?
Right. Okay. But Josh, you brought up an interesting point that I'd like to throw to Vijay, which is just people have to do their homework. They got to drill down. And I think that's one of the big challenges and even barriers to DeFi is that it can look, to outsiders, it can look so insular and esoteric and weirdly opaque and difficult. Now, Uniswap has a sizable retail audience. Uniswap became a unicorn, one of the few to actually become a DeFi companies to become a unicorn in the midst of all of this madness. And you guys are dealing with the UX issue all the time. I mean, does DeFi have a UX problem? Is it just too hard to understand to those who aren't steeped in its secret ways?
Yeah, I think the past couple of years, it's definitely had a lot of UX, UI challenges. And also, I think just both the builders and market participants in the space have gravitated towards a lot of complexity, which is never a great formula for, broadening and getting more mainstream retail participants.
Or even institutional too, right? It's
institutions as well, yeah. Except for a select few, the most sophisticated, like high-frequency trading shops, market makers, they're in the space. But if you want to go beyond that, it's still fairly complex and opaque. So we spend a lot of time at Uniswap Labs, we're thinking about how to really broaden that mainstream participation. And so a lot of the products we're building now are really designed to streamline retail and institutional UX and UI, and kind of abstract away a lot of the on-chain complexity of the protocol. For people who want it, it's still there. You can code in Solidity, connect directly, and same for other protocols. But I think it's important in this next wave of building 2023 to start thinking about kind of what are the interfaces or points of connectivity we can build to streamline access.
Is there industry consensus on this, like that this is an issue that DeFi needs to become more accessible?
I think it depends who you ask, really. If you ask some protocols that live and breathe their product, to them it's very easy to use.
Well, yeah,
it's you just connect your MetaMask and off you go. Yeah. But if you bring that to your average new DeFi user, I think the universal consensus is, I don't know where to get started. So it seems to me like there's a big job in getting people active in DeFi for the very first time that simply don't understand the world of Web3 wallets. And that's really where it all starts. It starts with the wallet, starts with how you secure your assets. And from there, the user journey of the protocol that they use, like a Uniswap, which is wonderfully easy to use versus a lot of other products, is really the secret in making this go mass market.
But nothing is wrong here when you look into the history, right, with the internet and so forth. I mean, if you think about where we are, if you compare it to the internet, we're probably in the end 90s, right? So you have to do this explanation because most of the people will only start to use it on their cell phone or their computer in 4 or 5 years, right? And right now they need to understand it. And again, if they don't understand it, they shouldn't invest.
Yeah, but there is a kind of sense of inevitability in what you're saying, and that's not really true. It's not inevitable. I mean, growth is not inevitable, right?
Yes, but the question is who will grow with you? And those should be the ones who understand it.
Yeah.
But maybe, I'm quite old, coming from the 80s, so you could say, like, I have a feeling DeFi sometimes feels a little bit like MS-DOS. Like Bill Gates,
MS-DOS, I haven't heard that in a while.
Bill Gates could use that before Windows came in and all the other stuff. And if you look at that, even at that moment in time, like many companies said, like, no, thank you very much, too complicated. We do not have the people like to understand that. So we have to work on that. But you want to have adoption in DeFi. So the question is like, which part of capital markets is the most innovative part? It's normally FX. If you today, as an SME, trade €1 million for dollars, you pay 30 pips, or maybe 50. It means like 3,000, 5,000 euros just for the trade. And if I see in DeFi right now, I see so many like who pay like also 30 bips on that, on their traders, and ask myself like, why is this so expensive? I would challenge everybody and say like, hey, if you have like USDC, right, for example, our euro as stablecoins, and you put it like in a smart contract, you do like simply an atomic swap between the two, and you have like somebody like managing the risk in there. How much should it cost? 1/2 pips? 2? Maybe 3, but not 30. And that's like where I see adoption. You really, if you want to have adoption, show people, especially in traditional finance, how to get the costs down. And do not think about like, okay, we do it this way and this is really cool or so. No, people there are totally boring. Like our project is totally boring because we want that nobody thinks about it, how to use it, just use it. And if you think this way and you think about like it should be totally boring, then boring means bring the costs down. Banks cannot close like branches forever because there are not so many anymore. So then they will probably like begin to fire people on the compliance side and so on the cost side. But if a bank manager could bring costs down on technology, how that's used and for their clients, they will do it because it's a lot easier than to tell like 100 people you have no job anymore. That's like what I would propose, like think forward. Do not look backward, really think forward, like what can you do in traditional finance, how do you help? And DeFi and all the technology below that is so damn interesting and how you can make the whole thing more efficient. But we have to come away from the whole thing that we have the most crazy, interesting stuff out there. No, be boring and get adoption. Not like 2.5% of this like Earth, take 100% as aim.
I realize we've gone this far in our DeFi conversation and haven't really talked about Ethereum. And speaking about infrastructure, about adoption, I mean, it is the spine of this system. As Ethereum goes, so goes DeFi. Is that formulation? Is it that simple, or not? I mean, we have another upgrade in Ethereum coming up. Shanghai is on deck. We see the vibrancy of the Ethereum staking market right now, which again crosses between assets as well as infrastructure. Mining now taken out of Ethereum. How should we as investors be looking at the changes to come in Ethereum and its impact on DeFi? Who wants to jump in on that one first?
Sure. Yeah, I'll take that. I think historically, Uniswap has always been sort of EVM maximalist, and so very much, thinking a lot about the Ethereum ecosystem and what we can build around it. And I think, the bear market will probably be good for general adoption on Ethereum because you see that consolidation. But I think at the same time, there's a lot of interesting work happening with other layer 1s and 2s that are using that model, but in sort of a different context. And there's a lot of interesting technology there as well that can be purpose-built for specific use cases, like maybe derivatives trading or other more complex use cases. So I think it's all sort of a testament to Ethereum and just the fact that it has inspired a wave of kind of not imitators, but sort of people who are taking that as inspiration to build fine-tuned systems that cater to different needs. But at the same time, just in terms of mainstream adoption, understanding, access, I think Ethereum has the most going for it. So in general, pretty bullish on the ecosystem, and I think there's always a lot of R&D and checks and balances happening with development across that ecosystem, and so it leads to a lot of resiliency and just kind of anti-fragility that you can place a lot of trust in. But I'm curious to get other views on that.
Yeah, I mean, with Shanghai, I guess it'll be delayed inevitably, but March, April is kind of the time frame for these things to happen. What should investors be looking at as it unfolds? How is that going to change the investment picture? How does that change perhaps how you, Guenther, look at potential investments in the DeFi space?
Well, to be honest, we haven't linked it to Ethereum. We've been following it like everybody else. See the interesting part, but I'm in no position to say that's the one. So we will just be watching whatever comes out of it and do it. Otherwise, we will just be as enthusiastic as always talking to the DeFis out there, right? And the idea is really, and you said it perfectly, right? It's about adoption. How can they really manage to win and get the usage and the adoption of that? Because that's the main challenge right now that many of them are facing. Great ideas, really brilliant minds, but it's just too difficult to communicate it. And I like your view of that you need to find the bank manager. The problem is that the bank manager doesn't have the power to change anything. So you need to talk to the C-level of a bank. And I see some faces in this room who have that background, right? So I think that is the important part, how you can really get the board, executive management of banks to collaborate, and also in Switzerland, right? I think mostly it's happening now in the UK and the US and so forth. So that will be the really interesting part.
Is it going to be difficult to reassure those figures that, all of the bad behavior that we've seen of late that's been making headlines is, how do you reassure customers that their deposits won't be mismanaged? DeFi has a different structure because of smart contracts and so forth, but where does that reassurance, how does that happen?
Why does it need to be happen?
It doesn't need to happen.
No. We had a savings and loan crisis like in the US. We had in between like bankruptcies. We had Lehman moment and so on.
Subprime mortgages.
Yeah, and we have a lot more. We have CDS out there. Well, as I always tell like to some students, you take like fire insurance on the home of your neighbor, which you do not like. That's a CDS. And like Warren Buffett said, like it's a weapon of mass destruction. Yeah, it is. So we all have this stuff out there. And then we say, like, okay, now we as the DeFi have to explain, have to excuse ourselves. Sorry, is JP Morgan doing that? No. Yeah. Is Deutsche Bank doing that? No. They just like paid money and then that's it. How many bankers, and I was a banker myself for 25 years in investment banks. And how many bankers really went to prison?
3 went in Iceland.
I think like in Italy, there were a few guys, like I know personally, who were convicted. And the guys were totally cool. They got a conviction like 4 years, 6 years, 8 years. And they said to me, Ralf, that's the first round. In Italy, we always have 2 rounds. In the second round, free. So if you look at that, and then I have to ask, like, is Volkswagen still like saying excuses to everybody because of the diesel scandal in Europe? Well, they paid like 25 billion like in the US, paid nearly nothing, you have to say, in comparison to that. No, they are not doing that. If we going back always and saying like we have to excuse ourselves for people like Sam Bankman-Fried, and there will be others to follow. That's totally clear. If we do that, we will probably only do that. But hey, we all want to have like a bright future. So the thing is like, what is really the innovation? How do we get like adoption together? That's the thing. For that, we have to build infrastructure. That's like the first thing, and then you build. But
you also have to measure it too. And what I would like to ask is metrics. What metrics should investors be looking at right now to get a handle on whether DeFi is actually fulfilling all of the growth plans that we hear from this stage, that we hear from other stages, that we see in the press, et cetera? What metrics should investors be looking at to see if DeFi is fulfilling its promise? Vijay, maybe you start, and then Josh?
Yeah. So I think there's a few that come to mind for me. So it's volume and sort of volume that's relevant specifically to the given use case of a DeFi app is a big one. And I think in a lot of ways just serves, the longer a product has been operating and the higher that volume number, the more trust you can have. And so it just sort of builds and compounds. And all these numbers are transparent and on chain. So there's, with the right level of sophistication, you can actually go out and sort of DIY and audit this information. But going back to the earlier point, it's important to also, I think, for the ecosystem to provide tools that can translate a lot of this, make it easily accessible in a dashboard, make that understanding easier. That's a big one. And then, I think a few others are liquidity and just, number of hacks that have happened or how they've happened. Obviously, the absence of any is great, but I think really being transparent and providing dashboards that surface this information for multiple projects is key. John?
Yeah, so to pick up on that point, transparency is really important. So if I was an investor, I'd be looking at what is that product doing to be as transparent as it possibly can be. And there's a lot of obfuscation in this space. There's a lot of conveniently.
But that's more qualitative than quantitative, right? I mean,
Yes, but I think it's very important because this wave at the moment in the DeFi space, you've got people building tools that are first trust minimized and trying to work towards a trustless environment. So investing in a project that is purely trusted, where you have to trust the actions of a certain developer, for example, or developer community, versus investing in a protocol that has managed to crack something quite new and brings a trust-minimized environment to its user base, where you no longer have to trust in certain human activity, such as updating the smart contracts or securing it. I think that in itself, alongside these kind of quantitative benchmarks you can look at, there is a layer of DD that should focus on exactly what's being built. And if you can build systems that are inherently trust minimized, the mantra we always say is, don't trust, always verify. Look for things that you can do, a project that you can invest in that you can really do that with. And if that's the case, it's genuinely new and it's a unique proposition.
And again, we said that DeFi is disruptive, right? And I'm looking at Daniel sitting here in the front row because he has been investing in the web, right? So if you had asked anybody when he started to invest, what will the number of the web will be kind of in the next 10 years? I mean, the scope it has just blown to is impossible, right, to even grasp. I think, yes, you can do all of the quantitative and qualitative, and that is my auditor hat, which I don't have, but at least firm-wise, yes, you have to do that, but be prepared to expect that it's going to be way, way, way bigger.
Ralf, do you have what metrics would you look at that are, let's say, quantitative?
Quantitative, risk.
Risk.
Yeah. A lot of people are telling me like how big the market will be and so on.
Yeah.
So, okay, what is the maximum risk you take? Do you understand the risk? Which risk do you have and which risk do you hedge out? So that you are totally aware, like what is the amount of dollar risk you put in one direction? And not like in different kind of directions. So you have to understand your project, what the risk is. I'm coming from originally like from risk arbitrage. So for me, it was always important like to understand risk. And not the obvious risks, like the risks like second, third grade or so. Like what are these risks and how could they affect that? If somebody can tell me like in a project, that's the risk. And we can even say if this goes wrong, it costs probably like this amount of dollars or so. I have at least the feeling that somebody really caters for risk and tries like to really bring a project forward. Because most people live in this holy land of we will like go like to 8 billion people. I had one project, I just like used their model from 5 years and put it like to 8 years, and suddenly I had like 10 billion users. And I said like, well, okay, now we know aliens will come to us because otherwise it's not possible.
Good, good, okay. Well, thank you very much for that tour of DeFi and insights into what we should be looking for as 2023 unfolds. Please give a round to our panelists, Guenther, Ralf, Josh, and Vijay.